What is going on, investors? Back again. Time to take a look at another stock today. It's going to be Walmart, one of the world's largest retailers, ticker symbol WMT. We're going to jump into the stock. We'll take a look. They just reported earnings this morning, Q2 earnings. So we've got a couple slides here from their presentation I want to just talk about really briefly, and then we'll jump into the revenue, the profit, the balance sheet. We'll take a look at all that. Then finally, we'll jump over to the chart. Maybe there's some levels here where we can potentially buy this stock. Now, the stock really isn't doing a whole lot. It kind of went up and then it went back down, but it's been kind of flat during today's trade. I think the revenue and the profits and the earnings release was relatively in line with what investors were expecting. This is a $384 billion market cap on this company. You get a little bit of a dividend here, so it is kind of nice. You get some growth in the stock. So the stock obviously has been on a rocket ship, so you get that, but you also get a 1.59% yield, which is little bit lower than you typically got with Walmart because the stock has just made this monster move. Obviously, that's going to drive the yield down, but expect Walmart to increase that payout going forward. This is a stock obviously at an all-time high, but also at a 52-week high. You guys know how I feel about buying stocks when they're at all-time highs. Investing 101, buy low, sell high, or at least buy low. I don't think you're necessarily going to do that here, but let's take a look at some of the slides. So we had net sales up about 9.5%. Look at this e-commerce growth, up 97%. So they're growing really fast in their e-commerce business. Also really interesting. So we had the 9.3 comp sales, but notice actually the number of transactions went down 14%, but the average ticket went up 27%. So consumers are consolidating store trips, so they're going to the store less, but they're buying more. They're stocking up, so to speak. Now, probably more interesting on here is take a look at this. Q2 sales were strong, both in-store and online, particularly in general merchandise, helped by government stimulus spending. So grocery sales had another strong quarter and a couple other stuff. But I want to show you here. Here's a little bit more detail on this. Grocery was up mid-single digits. I think that's expected. Health and wellness, interestingly, just a low single-digit comp. That's probably about standard for Walmart. But take a look at general merchandise. Mid-teens growth. That's probably an acceleration due to government stimulus. So that's electronics, outdoor, sporting goods, apparel, basically stuff you don't need. And so here's my takeaway from this, not just from Walmart, but broadly. Okay, maybe we have more government stimulus, maybe we don't. I think it's a little bit up in the air right now, but whichever side you decide to come out on, guess what's if there's more government stimulus, guess where that money, or a lot of that money, is going to go? It's going to go to general merchandise. Okay, people are going to buy more electronics. They're going to buy more clothes. They're just going to spend it on stuff that they don't need. If there is no government stimulus, well, I would expect these categories to suffer over the next 6 to 12 months as people don't have that extra income to spend on these categories. That's just my opinion. That's a takeaway that I get. I think if we see government stimulus funds, it's going to flow into general merchandise, basically like disposable goods, clothing, electronics, stuff that people basically don't need. So that's just broadly how I'm looking at that. And that's broadly how I'm looking at the government stimulus is in the news quite a bit right now. And I think you as an investor should plan on going either way. Put your politics aside. Go plan on your going either way. Okay, maybe there's government stimulus. Guess where it's going to go? Best Buy, Walmart, Target, Apple, Amazon. Okay, if there's no government stimulus, then I think all bets are off on those types of things. So now let's jump into again, these came out just this morning. Okay, so we've got revenue up here. We've got 3 months ended here, 6 months ended here. Obviously, we've got strong growth over here at Walmart. We're up 5.7% in the quarter. We're up 7.2% for the 6 month ended. That is super strong. Got a little bit of membership income here that's down just fractionally. I think that's related to Sam's Club. Now we've got cost and expenses. Take a look at cost of sales. So this is a low margin business. Reminds me of taking a look at Amazon. Relatively low margin business. We do see Cost of sales ticking up slightly, but it's ticking up almost in exact relation to net sales. So they're keeping their margins intact. That's good. We've got operating expenses ticking up just a little bit here, little bit faster here than how our sales grew up. But I think some of that can be explained possibly by, having to have more protections for the workers, maybe more shifts, maybe more workers on the floor, more cleaning, things like that. Very much in line, in my opinion. And actually, for the 6 months, we actually see it down just a little bit. So that's a positive trend. We made $6 billion in operating income for the 3-month period. That compares favorably, up 8.5% compared to the previous period where we made about $5.6 billion. For the 6-month ended, take a look at this. We grew revenue 7.2%. We grew our bottom line 7.2%. That's what you call a well-oiled machine. That's why I like investing. Full disclosure, I should have said this at the beginning. I have some Walmart shares, not a significant portion of my portfolio. It's a stock I want to add to. So when we jump over the chart, I'm going to be really paying attention to that. So 7.2% on the top line, 7.2 on the operating income side. That's absolutely phenomenal. So we grew debt a little bit. I actually think this is interesting. This is interest. I guess this is interest payments on debt. They've got these finance leases here. It's all very much in line. In fact, it actually went down for a 6-month period, ticked up slightly here in this period, but very, very much in line in terms of interest payments. I actually kind of like how they break that out. It's not a significant amount of money, but they do break it out for you. That's actually kind of nice. Now, coming down to consolidated net income. So this is the bottom line. We have the top line here, bottom line down here. We did take a look at this bottom line. Bottom line growth, 79% in the quarter. That's awesome. So we have $6 billion, $6.5 billion in the quarter. For the 6-month ended, we're up 40% on the bottom line. That is from $7.5 billion up to, call it, about $10.5 billion. That's absolutely phenomenal. We've got almost an identical amount of shares, so that I don't think I saw on the slides, they didn't really execute on the buyback that much in this quarter, but you see for the 6-month, I think they bought back some shares previously. That's actually, to me, showing good discipline, because as we see this stock chart, this is like Q2 is right here. This is at all times high. They didn't buy back any of the shares. I actually like that. I prefer when these companies wait till their stock dips to buy it back. It provides a little bit of support. Now, from a balance sheet perspective, here we are at the balance sheet. So we've got July here. We got January. So the first of the year, or actually, I guess it's their first quarter here, but it's the end of January. And then we've got the previous period here as well. We see we had cash kind of stuck in this 9.5 range. We ticked up about $5 billion. I'm wondering if that's from operations. I'm wondering if that's from a debt raise. We'll find out in a minute. Receivables, everything looks fine. Inventory, take a look how steady they're keeping this inventory. In fact, it's down a little bit. I noticed in one of their slides, they talked about how they were actually out of stock of some things. And if you go to stores now, a little bit of anecdotal research, but if you go to Target, you go to some of these stores, the shelves are a little bare, and I think it's supply chain related and things like that. So that might impact sales the longer that goes on. But from an inventory perspective, they look very good. Total assets, we've got $237 billion. That is almost identical. It's almost a rounding error compared to the previous period. Now, liability side. So we've got long-term debt here. That actually went down slightly, so that's good. We've got short-term borrowings here. No, I mean, it looks like to me, most of this money came from operations. And so that's actually phenomenal if that's true. So we've got some dividends payable here as well. We've got, everything looks really strong to me here from the liability side. Everything looks well within line within previous period. Again, we paid down a little bit of debt here. We've got short-term borrowings here, which is almost insignificant. Everything looks really good and really strong. Now, from a cash flow perspective here, we ticked up. Wow, look at this. this is 6-month ended. We went from 11 billion in cash flow all the way up to closer to 19 billion dollars in cash flow. That's where probably some of this cash is flowing to the balance sheet. So we see here dividends paid, purchase of common stock. So you see they did very little. So this is 6 months. They did very little buybacking of shares in the last 6 months, which I actually think is wise. They did much more buying back of shares in the previous 6 months where the shares were much, much lower. So you see repayments of long-term debt here. So yeah, we paid off the debt in the quarter. Our cash balance went up. This is a company that's firing on all cylinders, guys. And the cash flow is super strong, and that cash is actually flowing up into the balance sheet, and we're paying down debt at the same time. This is a company that can easily pay their dividend and probably raise it. I don't know when that might be. They probably raise it every year, but this is a company that could potentially raise this dividend more and buy back more shares if they want to. This is probably one of the more financially healthy retailers out there. I think that goes without saying. And I think Walmart is in a great position going forward when competition starts to roll over. We already see all the mass amount of closures and bankruptcies in the retail spot. Walmart's going to capture a ton of that business. Now, these stocks are at an all-time high. Again, like I said in the beginning, Investor 101 is buy low and sell high. Whether or not you want to sell, I don't care, but definitely you want to buy low. I am not looking to add to shares of Walmart up in this top of the channel. We gapped up here. If I wanted to add more shares of Walmart, I'd wait for shares to get in this channel where we're between, call it 128 and 133. So just slightly lower if you want to buy at the bottom of the channel, think it's going to stay up here and keep popping up here. If it breaks down below here, we fill this gap, this stock could come trend back down here into the 128, 129 area. I think that would be an attractive area. Now, if things break down, there's no stimulus, the economy gets really bad, all those things could potentially happen. Yes, this stock could drop down, in my opinion, down to this, even the lower channel where we're down here between 121 and that 128 level. This is where I would definitely look to add shares. And then I guess we'll have like the doomsday scenario. I guess, somewhere down in here potentially before it breaks down all the way to where we are in March. Down in March, this was $100 stock. I could see it really doomsday scenario. Things get really bad. Yes, you can come all the way back down here to 115. Do I see that as something likely? Probably not, because Walmart is pretty resilient even in bad times. More shoppers would tend to flock there if financials got really tight. But what I do see is this channel here. If you're really antsy and you're trying to buy into Walmart, I would be a little patient. Let's see if maybe the stock bounces around up here in the top of this channel, creates a little bit of demand, then maybe you can buy shares there. I wouldn't open up a full position. As it drops down here, I think you could be slightly more aggressive in this channel, be even more aggressive here, and then here I think you could open up a full position if you wanted $1,000 in Walmart, or you had 10,000 or whatever the dollar amount, even one share or two shares, you could open up a full position down in this channel, because I think your downside here at 115 is back down into the hundreds, but your upside is back up into the 130s. I like that risk reward tremendously. So there's Walmart. Again, I own some shares of this. I like this company. I like Amazon. Those are the only two retailers that I'm actively trying to buy shares, or I'm actively excited about owning shares, is Walmart and Amazon. I think they're going to gobble up a lot of the e-commerce, and then Walmart on the physical retail side, they're definitely crushing it as well. So there's Walmart for you. We'll be back again with another stock analysis. Hope you guys enjoyed this one. Maybe consider hitting that subscribe button if you like what we're doing here. We'll be back again soon. Good luck with your investments.